Hey, how you doing? It's Jordan Dove, and today is Monday, September 19th, 2022, and it's time for our Market Pulse update. Wanted to say thank you guys for being here. Thanks for watching the video. I appreciate you guys who have been coming consistently since day one. You know, we're not the fastest growing channel, but I believe the information is good and the data is good, and this is stuff that's going to keep you educated and keep myself educated so I can better serve my clients. Anyways, Thursday is the last day of summer, and I hope you all enjoy yourselves and families as we enter into the fall holiday season. I love the holidays. I love my family, love my children most of the time, and it's nice when the weather starts to cool off here in Vegas. It's been hot as hell. Those energy bills have been crazy. I can't wait to turn off my air conditioning. So anywho, I am Jordan Dove. I'm a realtor and team lead of Dove & Associates in Las Vegas, and it's time for this week's Market Pulse, where you're not going to get any sales fluff, just the data as it is. If you're looking for an agent in Las Vegas, Southern Nevada, Clark County, Henderson, my contact information is below in the description of this video, and I would love the opportunity to work with you. If you need an agent across the United States, reach out to me. I have a large network of trusted real estate professionals in your area that I would trust with my own family. Okay, so let's dive into it. Reviewing last week. We're going to review last week. We're going to talk about our national housing update, some economic notes. We're going to talk about the Southern Nevada market update, and we're going to talk about this week's forecast, as well as we're going to have some notes on the Federal Reserve. Okay, so reviewing last week, inflation struck back just when the pundits on TV and the talking heads in the media were telling us that the inflation surge was over. The August Consumer Price Index, or CPI, went up and stocks tanked because the traders were fearing that this would spark a more aggressive Fed rate hike coming this month and in the future, and it will be resulting in a recession. But here's the reality check. We are already in one. By definition, we are already in one, and in my opinion, it's going to get worse before it gets better. No up cycle goes up forever, no down cycle goes down forever, and it's going to be okay. Anyways, the 0.1% CPI gain, it would have been bigger if gas price hadn't dipped for the month, although gas is still way up for the year. But other prices did increase sharply, notably food and shelter, both up 0.8 percentage point for the month. August retail sales ticked ahead 0.3 percentage point. It was driven by inflation. Thanks to these low gas prices, however, the University of Michigan consumer sentiment stopped dropping for the first time in quite a while, but it's still historically low, with uncertainty over inflation the highest since 1982. Last week ended with the Dow Jones Industrial Average down 4.1%, the S&P down 4.8%, and the NASDAQ, the tech sector, getting absolutely crushed. But that stuff's been overvalued for a long time. We all knew that. The NASDAQ was down 5.5%. Also halting inflation, bonds followed stocks south. The 30-year UMBS 5% down 0.98 to $99.18. In Freddie Mac's primary mortgage market survey, the national average 30-year fixed mortgage rate rose 13 basis points, which is 0.13%. Remember, mortgage rates can be extremely volatile, so check with your mortgage professional like Chuck Barone with Right Choice Lending for up-to-the-date information. Now, moving into our national market update, the National Association of Realtors reports active housing in the market continues to grow. The inventory continues to grow, up 27% from 1 year ago versus last year. You know, shoppers have more homes to consider. Even though inventory isn't back to pre-pandemic levels, they have so many more options than they saw over the past couple of years, and those bidding wars in the majority of markets are completely gone. Keep in mind, there are still some hot markets doing really well out there. The cost of living is affordable. We're still seeing migration patterns, but it has slowed down significantly. A recent study reveals adults with school-aged children will account for nearly 1 in 4 home sales over the next 10 months. Families with kids over 18 and empty nesters will also be active. Singles and retirees, not so much. Another thing to look at, I think, is important to note is that as our economy worsens, and we're already seeing tons of layoffs across many sectors, not just real estate and mortgage, but tons of sectors, people are going to be in a financial burden. And when that happens, the majority of wealth people have is in their home and their home equity. And even if prices correct 20-30%, a lot of homeowners who bought several years ago or even a couple years ago, hey, those who bought in 2020, you're going to be fine, in my opinion, because your interest rates are so low. With rates so high and prices coming down, unless you're a cash buyer, you maybe have better payment terms with a major price correction. But anyway, those who have financial burdens may be looking to sell their home, which could add to the added inventory, because if you are in a bind and if you had financial burdens, but you had equity in your home, would you maybe not sell your home, cash out your equity? Hey, maybe let me go prepay rent for 1 or 2 years, stash a little bit of cash, maybe try to hold enough for a down payment when that market turns for you, and maybe that would be a better idea. So I think some people are going to start doing that. So our optimistic friends at Fannie Mac, they note that although the increase in rates will continue to dampen demand and put downward pressure on home prices, inventory remains inadequate. So while home price declines will likely continue, they should not be large. So thank you, Freddie Mac. We really appreciate your optimistic outlook on that. Some of the big economic notes happening right now. FedEx reported quarterly results early, and the delivery giant blurted out that spluttering demand across Asia and Europe stunted the amount of goods that it shipped. Separate U.S. data shows the number of shipping containers arriving into Los Angeles, which is the United States' busiest port, dipped last month by the most since the early days of the pandemic. Inflation rose 0.1 percentage point in August, even with the sharp drop in gas. Wholesale prices fell 0.1% in August amid inflation fears. Food, shelter, and medical services drove costs higher in August, slapping a costly tax on those least able to afford it. The food at home index has increased 13.5% over the past year, and that is the largest rise since March 1979. For medical care services, the monthly increase of 0.8 percentage point was the fastest monthly gains since October 2019. Veterinary care was also up 10% from a year ago. I don't know about you, but every time I go to the grocery store, I buy like 7 or 8 items. It's like $70. You know, produce doesn't last forever, but I feel like it just costs just as much to eat at home decently and healthy as it does to go out and get served and not have to make your food. But we're going to keep staying the course. We've been eating at home a lot, trying to drop some weight. But hey, you know, it's tough out there, so pinch those pennies where you can. Let's talk about Treasury yields. Oh, Treasury yields. The 30-year is down from last week's reading to 3.498%, but it is being outperformed by the 5 and the 2-year. The 10-year is sitting at 3.477, and that's up 15 basis points from last week's reading. The 5 is sitting higher than the 10 and 30, creating an inversion there, with the 5-year sitting at 3.642%. That is up 36 basis points from last week's Market Pulse reading. And the 2-year is trumping all bond yields, inching so close to 4%. It's sitting, I can't believe how fast this went from 3 to 4. It's sitting at 3.942%. That's up 45 basis points from last week. That's almost up 0.5 percentage in 1 week. That is astounding. That's creating a spread of about 45 basis points from the 10-year, the 2-year, 10-year, and that's widening the gap, and it appeared to be closing in over the past several weeks. The last time the 2-year was this high was at the end of June in 2007. I want to know, do you guys think the Fed is going to raise 75 basis points at the FOMC meeting on September 21st, or will we see a full percentage point that some are starting to speculate? Let me know what you think the rate hike is going to be in the comments. Type in half, 3/4, 1, 10, whatever you think it's going to be, let me know. Now let's talk about Clark County, Nevada, which includes Las Vegas, North Las Vegas, Henderson, and Boulder City. The absorption rate figure, that's something that I look at every day because it's the best indicator, in my opinion, on how hot or cool the housing market is. The current rate for the past 4 weeks is 20.74%, which is down 0.27 of a percentage point from last week's reading. This marks 2 consecutive weeks of a decline and a decrease in 12 of the last 13 readings. A market with an absorption rate at or above 20% is typically called a seller's market, whereas an absorption rate below 15% signals a buyer's market. So we will be breaking that 20% threshold here any week now. We keep inching closer. It's going to happen soon, in my opinion. Moving into the current median prices for September 2022, we are seeing single families are down $1,000 from August to $449,000, whereas condominiums are down $10K from the August median to $222,000, and townhomes are also down $10,000 from the August median to $315,000. Now keep in mind, the majority of homes, they do close and record at the end of the month, so we will have the actual data on the Market Pulse update on Monday, October 3rd. So make sure to subscribe to the channel, hit that bell notification to keep your finger on the housing market pulse, okay? This week in Clark County, we had 155 more active residential resale properties on the market compared to 1 week ago, for a total of 11,282 properties without an offer, and this includes single-family, condos, townhomes, high-rises, multifamily, and manufactured housing. The past 7 days, we saw 1,050 new listings on the market, which is 20 less than last week's reading, with 1,785 total price decreases. 768 properties accepted an offer in the past week and 619 sold, which was 5 more than last week's reading. Properties, they're still exchanging hands. We've had a total of 2,340 properties sold and closed in the past 4 weeks, with 11,282 available properties. So to figure out that absorption rate, you will take the amount of properties sold in a given time period. I'm using the past 4 weeks with the amount of available properties on the market. So we have 11,282 divided by 2,340. That gives us our 20% or so, okay? Available parcels of land increased by 83 parcels. There are currently 2,626 parcels of land available in the Clark County market, and there are 189 more active rentals on the market to 3,226, which is an increase of 6.22% compared to 4 weeks ago. Now we have a featured listing this week. It's a fully upgraded and renovated condo in 89074 zip code in Henderson, Nevada, of course, between Gibson and Stephanie on Wigwam. This could make use for a perfect starter home, and the seller is offering up to $5,000 in seller's assistance to help with that down payment, closing cost, or to buy your rate down. If you're an investor, it has a projected cap rate of 6.39% at the purchase price. It's being offered at $275. The estimated rent on the unit would be $1,750 a month, and you have to subtract $195 a month in HOA dues times 12 for the whole year, $697 in annual taxes, and an estimate of $400 per year in insurance. That would leave you with an estimated $17,563 net operating income divided by the purchase price of $275, leaving you with a 6.39% capitalization rate. Okay, so if you guys have any information about that, I'll put a couple pictures on here. I'll leave the flyer. Let me know. Reach out. We'd love to show it to you or get you some information on that property. Now, forecasting this week, August housing starts, they are forecast to inch up, but so is the Fed funds rate. The only question about the FOMAC rate decision is whether the Fed will go for a full percentage point hike. August existing home sales are expected to come down to a 4.7 million annual rate. And with the Federal Reserve having their FOMAC meeting on September 21st and inflation still rising, Wall Street is certain of a 0.75% rate hike from the Fed this Wednesday, followed by another 0.75% bump in November and a 0.25% lift in December. There is a 100% consensus of a 70-point basis rate hike but the rumors are swirling for a full point. What do you think? Let me know in the comments. What is the Fed going to do? What market are you in? Is your market still hot? Let me know in the comments. That's it for this Market Pulse. I hope everyone's doing great and doing well. Thanks for watching. If there's anything I can ever do, just reach out. My contact information's below, okay? Take care now.